Hey everyone, Justin Conroy, Financial Dad here, and in this video I want to give you the final piece of my budgeting strategy. I recently published two videos. In the first one, I talked about how to make a very simple budget. Then in the next one, I talked about how to turn that simple budget into an advanced budget. And today, I want to talk to you about how to take your advanced budget and apply what I call budgeting with buckets. Budgeting with buckets is the final piece that we're missing to turn our budget into the ultimate money management tool. Because when you ascend to the level of budgeting with buckets, it means that you've mastered the art of budgeting at the simple and advanced levels. So by the end of this video, I'll show you how to add in the functionality for buckets to our existing advanced budget spreadsheet, and I'll also talk through the philosophy of how to use the method. With that, do me a big favor and smash the like button for the YouTube algorithm. Let's go ahead and get to my computer and get this started. So what we're looking at here is the advanced budgeting spreadsheet that we put together last time. Now if you missed that video, let me do a quick recap. What we've got here is a cash flow spreadsheet. So we're calculating our cash flow right here for each month that we're actually looking at our expenses and income. So cash flow, of course, is calculated from the total income in a given month minus the total expenses in a given month. And those are obviously being generated from the numbers below, income here and expenses here. Now we had this example of a teacher who had about $5,250 in their bank account. And so we're taking that initial value and building in the cash flow each month to get our cumulative cash and forecast where our money will be in October of 2020. Now you'll notice there's two different colors of columns here. There's the white columns and the green columns. So this is important because in the simple budgeting video, we only had white columns, and that was just simply a plan. The advanced budgeting spreadsheet actually brings in real numbers from our list of expenses over here on the other sheet, and actually brings those numbers in so that we can compare our plan with our actual and get better estimates for the future. That's really what this is all about. The problem with this spreadsheet and the problem with leaving it here is that we now have this cumulative cash up here, this cash in our bank that's not allocated. And that is really what the problem is, and that's where budgeting with buckets really comes in to save the day. So in order to get started on building in the functionality, the first thing I want to do is change a few little data points in the spreadsheet because it will make the example in the future look a little bit better and make it easier to explain. So the first thing I want to do is I want to give our teacher a little bit more money in the bank up front. Currently they have $5,000. Let's bump that up to about $15,000, and this will make sense in a few minutes. So then you can see our cumulative cash every month has jumped up, and we should have somewhere around $15,600 by the end of October. So our teacher has been really good. They've been saving very, very well for a good long amount of time. I also want to clean up a few other things to make our cash flow bigger so that, again, we can estimate things and just show you a little bit better examples. So I'm going to go down here and I'm going to adjust our forecast that our teacher is going to stop going on dates, stop wasting money on dates, stop wasting money on entertainment, stop wasting money on fast food, and stop buying gifts for people, okay? So that's probably good enough for now. We can leave it there because that gives us about a $500 per month cash flow to play with. Now I mentioned budgeting with buckets is really the next step, and the real problem is the cumulative cash not having an allocation. We want to make sure that all of the money in our bank account has a name put on it. We want to make sure that we know exactly what that money is for, and that's what this is all really about. So as a next step, I'm going to go ahead and just hide the expenses really quick because they're just kind of getting in the way. I do want them to still exist, but we're just going to hide the rows so that we can have a little bit more room and the spreadsheet will be a little bit cleaner. Next thing I'm going to do through the power of video editing is paste in our working area for the buckets numbers. Now let me explain to you what we've got here. It's actually very simple. We've got a section header here up top in row 45 for buckets. We've got cash flow from above, which I'll come in and do all the formulas in just a minute. The adjusted cash flow, contributions, savings expenses, and cumulative summations. Now what this is all about is putting a name on the money that we have. So what we want to do is be able to contribute to a certain savings fund. We want to be able to expense from a certain savings fund, and we want to be able to see what that savings fund has in it no matter where we are in the year. Let's go ahead and do some of the simple equations right now. Cash flow from above is, again, just the cash flow from above. We're going to grab that from the cell D7 and then copy that across, and this is just so we can simply see it more easily once we unhide all the expenses. We want that number to be in our face. Let's go ahead and do the summations for these. These are really easy. We want the sum of the numbers below. These are our contribution totals. We'll come back and fix the formatting in just a minute. No worries on that one. Paste those down here because they're all the same. And we've basically got our equations for what we need. Let's go ahead and clean up the formatting really quick, and then I'll come back. Next, I want to go ahead and build in the cumulative summation formulas. This is also a really easy one. So for emergency funds, we basically just want to be able to track what our emergency fund value is every single month and how it changes. What is the cumulative sum of that fund? So what we're going to do for the first month, it's a little bit different, is we're going to add the contribution plus the expense, which is going to be a negative number, okay? It's going to be the exact same thing for the cells below for our property taxes and travel categories. And then for the next cell over and the ones all the way across, we're doing the cumulative sum. So we want to do the old value plus the new information. So plus the new contribution plus the expense in that category, okay? And it'll all make sense as soon as we get some numbers in here. I'm just building out the formula so that we can actually see what's going on when we start playing with numbers, which is coming up right now. So in order to work with real numbers, what we need to do is start allocating the funds that we have. Now, I did notice one thing that we need to fix. Our cash flow from above is correct in this cell, but it's actually not quite what we want in this cell. The way I built the simple spreadsheet made more sense, but now that we're getting a little bit more advanced, we need to adjust the way the spreadsheet calculates its numbers, just so that it makes a little bit more sense for the buckets. So what I'm going to do is, you can see here where for our cumulative cash, I built in the initial value in this cell. But what I'm actually going to do now is remove it from this cell, and I'm going to put it in this cell, okay? And that's just for the initial value for the first month. You can see the resulting values here are the same, but our cash flow is falsely inflated for this first month. That's perfectly fine. Your first month is always going to be a little bit weird, but after this, it's totally fine. This is what you want, because now it allows us to come down here and see exactly how much money that we need to put a name to. And that's what this is, again, really all about. So let's just do an example and it'll make sense. We're going to go down to emergency fund. How much does our teacher need in their emergency fund? And this gets to why I increased the initial value at the beginning. Our teacher has a monthly average of $3,200 a month in expenses. Emergency funds are usually 3 to 6 months. Let's say our teacher has the bare minimum 3 months. That's times 3. Our teacher's emergency fund needs to be about $9,500. We're going to call it $10,000 just to be safe. So come down here, type in $10,000, and so what we're doing is we're contributing $10,000 to our emergency fund, which is a virtual savings account, okay? And you can see that down here on the bottom. We now have $10,000 in this account, and we plan to have $10,000 in this account for the duration, okay? Now once we've done this, you don't need to worry about putting any more money into your emergency fund for the rest of the duration. So we're good to go. But at this point, we've only allocated $10,000 of our $15,000, and there's some change there. How much money do we need to put a name to at this point? That's where we get our adjusted cash flow from. That's what this is all about. Because cash flow is income minus expenses, and I would argue that your contributions to your savings buckets is a type of expense. So that's why it's an adjusted cash flow. So I'm going to do the cash flow from above minus the contribution totals, and that will tell us exactly, paste this across, that will tell us exactly how much more money we need to put a name on before we're done with the month. So let's go down to property taxes. Let's assume that our teacher has a $4,500 per year property tax bill on the house that they own, okay? So let's type in $4,500. That means that we are ready, we are saved up. When January rolls around and we need to pay that property tax bill, we've got it. We don't have to worry about it, okay? Stress-free living here, okay? But we still have $500 we need to allocate. Now, our teacher loves to travel, so we're gonna go ahead and put the rest of our money into that travel budget, okay? We're gonna assume that our teacher is not doing anything else smart related to investing and whatever else. So we're gonna say that they're saving up all their money for, let's say, a big trip that they want to take in the future. So we're going to put all our extra money in our travel budget. So you can see how this works. If we go ahead and fill out the rest of the contributions, the example will make even more sense. So let's go to the next month. We had a negative cash flow this month. We spent too much money. So in this case, what we're going to do is we're going to say, well, We shouldn't have done that. We screwed up. We're going to deduct that from our travel budget because we don't want to take away from our emergency fund. So 523, I'm sorry. We're going to do negative 63.14 because that's exactly what we went over. And you can see down here in our cumulative money, we had $523 in the first month, but we had to remove some money because we spent too much money elsewhere. So now we've only got $460 in our travel budget. Next month comes around. Let's go ahead and put a 0 here because we don't need anything. We're done for property taxes the rest of the year. Go ahead and plug that in. Next month, we have $248.73 of extra money, and we're going to put that in our travel budget because, again, we want to go somewhere really big in a couple of months. We're going to save up some money. So now you can see our cumulative bucket down here for travel is building. It has $708 in it now. Now let's say we do that every month. We just keep putting money into our travel bucket. Okay, what does our travel bucket look like? $489.36. It's going to be the same every month. You can see that our adjusted cash flow is is 0 every month because we've now put in all the money that we need to into our buckets. And lo and behold, at the end of the year, or at least in October, we have a total of $16,676.92 in our savings account with a name on it. And that's what this bucket program is all really about. We have $16,600 with a name. $10,000 of it is for our emergency fund that we're not touching. $4,500 of it is for our property taxes that are due in 2 months. And we now have $2,176 in our travel budget. So you can see how this plays out over time. We can plan ahead and see where our savings is going to be in the future if we can stick to our budget and stick to our cash flow. Now, the one more thing that we need to add in here is our savings expenses. Because what happens if in the future you come in and you spend some money on travel? So what we're going to do, this is actually really easy, which is why I saved it till the end. We're going to unhide our expenses from above because we've got a formula here that pulls data from our exports from our bank account, our credit cards, everything else. So what I'm going to do is grab that formula, come down here, and I'm going to paste it in those cells. And you can see for the first 3 months, it's going to be getting it from the real expenses. And then for the next months, we're going to do like we did above, and we're going to not plan to spend any money in those categories. And of course, this is again one of those situations where if, let's say in the future, you do come in and you say, well, in October, I'm going to take that trip. In October, I'm going to go and spend $2,000 on some big trip somewhere. Well, in October, you would plan and you would say, well, I'm going to do negative $2,000 in October. And you know what? We're good to go. We still have $14,600 in the bank, $10,000 in our emergency, $4,500 ready for property taxes, and our travel budget's back down to $176, and that's okay because it was planned for, and that was perfectly fine. That's what this is all about. Budgeting is all about planning, and budgeting with buckets is all about making sure that all of your money has a name on it. And that's where the real power of this whole program comes from. Your money is allocated, it's got a name, you know where it's going to go, you know what it's going to do, and as a result, you're the one in control of your money. But hey, if you made it this far in the video and found some sort of value in it, whether it be entertainment or education, be sure and smash that like button for the YouTube algorithm. Smashing that like button lets YouTube know that you enjoyed this content, and they use that data to help decide if they should push this video to more people. So it really does help this channel grow. Also, I post new videos about wealth building, money management, and personal finance every week, so be sure and subscribe down below for more content if you haven't already. But listen, if when it comes to saving for the future, are you sure you're saving enough money? Well, if you've never sat down and made a 10-year plan for your savings, I would guess that you aren't saving nearly enough money, so be sure and check out the video on the screen right now, because in that video, I show you a method for predicting your needed savings over your whole life, and chances are you aren't saving nearly enough. Thanks for watching, and we'll see you next time.